The world economy is currently in freefall. Long-standing macro imbalances have been exposed by the excruciating increase in the cost of debt, the continuous appreciation of the US currency, and the tightening of monetary conditions. These pressures are independent, mutually reinforcing, and ultimately unsustainable. Policymakers must ultimately reinstate their fiscally restrictive environment. The route of least resistance to deleverage the enormous debt to GDP overhang is to allow inflation to linger at consistently elevated levels for longer. This macro backdrop is expected to provide one of the greatest conditions in history for physical assets to outperform still overvalued technology growth companies, fixed income investments, and passive investing methods that dominated the last cycle. Active fundamental value and macro-oriented investments have returned to their golden age. In this video, we'll be taking an inside look into macro investing. Stay tuned till the end, since our last point could help give you practical guidance on macro investing. Stock market devotees do not always feel the need to be aware of macro trends such as the direction of the economy, the Fed's actions, the state of the housing market, and wage growth, despite the fact that some investors believe macro research and analysis to be nothing but hype and exaggeration. There may be something to be said about examining economic health when deciding which companies to purchase. Macro investing focuses on economic and political factors that impact the performance of financial markets. Macro investors examine possibilities and threats in global markets using a top-down approach. The objective of macro investors is to identify imbalances in the global economy and gamble, and how these imbalances will emerge. Macro investing is a speculative and occasionally risky practice. Both benefits and losses might be considerable. What makes macro distinct from micro? Individual company profits are irrelevant to macro investment. Rather than macro investor evaluates whether the majority of businesses in a nation are seeing average profit growth. In order to find potential trade opportunities, they assess the country's current economic and political ambitions as well as what the future holds for these variables. The investor examines the future direction of interest rates and commodity prices. They may apply the fundamental studies of economies and nations to identify the anticipated trajectory of the economy, and then invest based on these assumptions. Micro investing, on the other hand, entails examining individual assets in order to forecast their future pricing. The acquisitions of a single stock based on its technical analysis forecast of profits per share exemplifies micro investment. Value investing and growth investing are micro trading strategies since they focus on individual assets as opposed to broad market patterns. Who are the notable macro traders and hedge funds? George Soros, a well-known macro investor under Soros Fund Management in 1970, is an example of a macro investor. His was the best-performing fund in 2010 with average returns of over 20% during its 40-year existence. Ray Dalio, the founder of Bridgewater Associates, is a second macro investor. According to TipRanks, the firm's 3-year average return to investors was 11.25% through September 2021. This result is consistent with its long-term trend from 1975. The SPDR S&P 500 ETF Trust and Walmart are large holdings. Comparatively, from January 1, 2019 and September 2, 2021, the S&P 500 index has average yearly returns of 21.97%. What is the definition of global macro hedging? The global macro hedge is an increasingly popular investment strategy that attempts to profit from global economic trends. Investors that use their strategy typically invest in a varied array of assets such as equities, bonds, commodities, and currencies. A global macro hedging strategy aims to profit from broad economic trends. If an investor feels that the US dollar will decline relative to other currencies, he or she may invest in a basket by the currencies. If an investor feels that commodity prices will increase, he or she may invest in a basket of commodities. Global macroeconomic hedging can be used to protect against negative risk or to pursue upside opportunities. A global macro hedge may be deployed by an investor, for example, to protect against a rapid stock market crash. There are several ways to establish a global macro hedge. Certain investors make use of exchange-traded funds, EFTs, or mutual funds that track certain indexes or asset baskets. Others construct their own portfolios using individual securities. There is no right or wrong way to create a global macro hedge. It fully depends on the investor's goals. Can Bitcoin be used as a global macro hedging instrument? Bitcoin is frequently viewed as a volatile asset despite the fact that it has been quite stable in recent years. Some have gone so far as to assert that Bitcoin is an excellent hedge against macroeconomic volatility. Bitcoin may be considered a global macro hedge for several reasons. First, Bitcoin's independence from other asset classes may provide diversification benefits. Bitcoin has a global reach and is not subject to the same economic restrictions as conventional assets such as stocks and bonds. As a relatively new asset, Bitcoin may be less subject to global macroeconomic events than more established assets. Bitcoin is a risky asset that should only be considered in the context of a balanced portfolio. Bitcoin might be considered by those in search of an uncorrelated asset to hedge against macroeconomic risk. How can global macro hedges benefit macro traders and investors? Global macro hedges may be utilized by macro investors and traders in a number of crucial ways to protect their portfolios and profits. One way is through diversification. By investing in a variety of assets across a number of countries and regions, macro investors may insulate themselves from the risk of any one market. Another way is through currency hedging. Macro investors may also apply currency hedging strategies to protect their portfolios from the volatility of the foreign exchange market. By hedging against variations in interest rates, macro investors may protect their capital against volatility in the global economy. Investing in commodities or commodity-linked securities can be a hedge against commodity price swings for some macro investors. Equity hedging is another method. Investing in equity securities, which may provide protection against the decline in the value of other assets such as bonds or commodities, is still another method of risk management. Using these global macro hedges, investors and traders may protect their portfolios from a variety of possible global market risks. What risks are inherent to macro investing? The following hazards are associated with macro investments. Number 1. Geopolitical risk. Macro investors commonly take positions based on their estimations of how global events will play out, which can be difficult to predict correctly. The global economy is complex and ever-changing, making it impossible to estimate the future success of many businesses and nations. Changes in government policy can have a substantial impact on macroeconomic conditions, which may be difficult to predict in advance. Number 2. Market risk. Macro investing sometimes entails placing enormous wagers on turbulent and perilous financial marketplaces. Generally speaking, macro investment is marked by a high degree of uncertainty. This suggests that it may be a risky investment option for those who are hesitant to lose money. Why should the average Bitcoin trader or investor be concerned with macro trading and macro hedging? As a typical Bitcoin investor or trader, you may wonder why you should be concerned about macro trading and macro hedging. After all, you are likely not interested in macroeconomic trends or putting global bets on the future of the market. There are a number of reasons though to focus on macro trading and consider using macro hedges in your portfolio. Even if you have no interest in placing worldwide wagers, macroeconomic trends may have a direct impact on your investments. In the event that a major economy experiences a recession, for instance, the demand for Bitcoin and other assets may decrease, or if inflation rises, this may result in a decrease in your profits. By monitoring macroeconomic shifts, you may position your portfolio to profit, or at the very least, to minimize losses. Even if you're only interested in the Bitcoin market, understanding what's occurring in other markets might give important insights into the Bitcoin market's potential future direction. A rapid decrease in equities or oil prices, for instance, might suggest that investors are becoming risk-averse and seeking safe havens such as Bitcoin. Keeping an eye on these cross-market indications might assist you in anticipating large Bitcoin market swings. What are some reasons for optimism regarding macro investments at the moment? There is a solid case that long-only stock or bond portfolios will be challenged in the next years. Therefore, there is a reason to be happy to be working on this subject at the present. Whether based on actual or anticipated earnings, the current stock prices is equal to that of 1999. While they stayed at their peak for a considerable amount of time, they eventually began to decline. The historically low rates on bonds and their tendency towards normalization signal terrible future returns. Thankfully, the global macro manager is not constrained to long-only stocks and bonds. High-priced traditional assets may generate sales chances. Due to fundamental dislocations, even our current position of exceptional growth following the unprecedented collapse of the world economy may present investment possibilities. Macro strategies are the purest alternative investment products able to go anywhere and do anything in search of investor returns. When many doubt the bull market's potential duration, it may be sensible to consider diversification. If you liked this video, be sure to hit that like button and subscribe to find out more ways you can become financially independent.